Hello, everyone. Once again, my name is Alex Nichols here with the Figure Sales Success team. We have a great webinar planned for you, kind of on theme with the upcoming holiday Thanksgiving tomorrow. We are grateful for all of you, and I'm grateful for my team here on the call. So, as always, alongside us, we have our Senior Director, Tim Rowan, our Wholesale Manager, Scott Karch, and my co-partner in crime, Mike Orlando. Tim, how are we doing today?
It's going great. But not partner in crime, right? I
Sales
mean,
associate, master of
Yeah.
knowledge,
yeah,
great answer of emails.
right. Yeah. Anyway, doing great. And we are headed into the holiday season so fast. Like I got to tell you,
Mhm.
I'm not prepared for this, if I'm being honest. Personally at home, right? We're going to be doing some traveling and headed down, in my case, down to the Bay Area later this afternoon. But Alex and team, you are correct. We have a ton to be thankful for. And so we just wanted to kind of dive in and from figure perspective and the sales success team, kind of revisit all of the things that we've really done this last year and honestly how thankful we are for them and grateful. I'll just say before Alex pulls up a little slide deck page here to revisit some of these from a bullet point perspective. The truth of the matter is, which and Scott and Mike, you chime in here, please. But the truth of the matter is any of the enhancements that we have already made and continue to make are really a result of the feedback from our partners. Would you agree with that, Scott?
100%. I mean, look, even in this past year, the enhancements, the new features, the updates have been, I mean, so fast forward. And it's all because of the feedback we've gotten, starting in wholesale, private label, wherever you were at, we got a ton of feedback.
Yeah, and it continues. So the importance
Yeah.
there is I need to click OK on live stream. That's new there, Alex. I had to.
Oh, it asked you that. That's
Yeah,
interesting. I guess
yeah.
because your senior director wants
I
your
I
permission.
I digress. But Mike, your feedback a little bit. Mike, how long have you been here on the team now? Is it 2 months, 3 months?
A little
Where
more
are we
than
at?
2 months. So I think it's like ten weeks, I guess, something like that. And yeah, I mean, just the enhancements that I've seen since, the short time that I've been here have been, the list is long yet
Oh,
distinguished. So, it's been great. And yeah, like this, we always say that, Figure is meant to solve for the life of the loan officer. So, we are trying to make this as easy for you and for your borrowers as possible. So yeah, if you see something that you think could be better, please let us know, and we'll see if we can, at some point down the line, get those that enhanced even a little bit further.
Yeah, and we're going to cover at least talk about some enhancements that are currently being worked on that we'll have done by year's end going into the first quarter. Some pretty exciting stuff, and Alex will kind of review some of that with us. But it's interesting, team, that in our roles here at Figure, we oftentimes, Mike and Scott in particular, we will have one-on-one conversations or meetings with LOs, and we always try and have that lead to a conversation or meetings with groups of LOs, right? The power of questions is always very, very valuable. By the way, a little side note, housekeeping item. We will definitely open this up to some Q&A before we end this webinar, like we do always. Oftentimes, that's the fastest path to learning something new or a tip or trick or best practice, if you will. But with that being the case, it can sometimes be hard for us and all of you as loan originators to honestly remember to be thankful for something. So here's what I mean by that. Sometimes as loan originators, the sky is falling, right? And I understand this world, and certainly so does Mike and Scott, having come to us from the lending industry themselves. It's easy, right? Escrow is delayed. The appraisal's not in yet. We don't like the value. The underwriter's asking for this, and the sky is falling, sky is falling, sky is falling, right? And it often lands on us as loan originators to provide and be the solution on any one transaction. And so we have a lot of those conversations with so many of our partners and their sales teams. As stressful as some of those conversations can appear, or frustrating that, well, I don't know what's going on with this or whatever the case is. I just want to make the comment, shouldn't we actually be thankful for that in the sense that there are a lot of loan originators in this current marketplace that don't have anything or fires to put out. They don't have deals they're working on. They don't. So I know it might be a skewed perspective, but I just want to encourage us all to remember that, you know what? Good for you. You're frustrated about a file. Here's the great news. You have a file. So, you know,
Yeah.
not all loan originators do, which we believe is one of the biggest happy paths, if you will, to why loan originators and our partners need to increase their engagement into our lead portal and inquiry tool and process, therefore resulting in whatever product you're looking for your client. It's really, really important. And Mike, you said it perfectly. It's the day in the life of the LO, right, that we're trying to solve the pain for. And that's what we've done. So even when it may seem a little broken, a little stressful, I'm on hold or whatever the case is, guess what? It's actually a good problem to have. It means you're busy. It means you're helping homeowners. And ultimately, that's what we're all in the business of doing. So always need to remind ourselves, even us team, to be thankful for those calls, right? The opposite could be true. The opposite could be our phones never ring, we never get an email, and we may think, wow, wouldn't that be amazing? But would it? You know, like,
I
would it really be?
I like job security. That's my thing.
Well, and do we want to enhance? Do we want to get better? Do we want to make the process more seamless? Of course, all that is true. But I just want to encourage everyone, tis the season for us to really take pause, take a deep breath, and go, you know what? I'm actually thankful that I have some transactions that, sure, there may be some fires, but at least I have something to work on and some people to help. So I think that's really, really cool, ultimately, at the end of the day. So anyway, Alex, you want to pull up
I was
the
gonna say that's what we're here to do. We're here to help folks. So let me go ahead. I'm gonna share my screen as always here. That's kind of the big talking point, right? Is just thanks for being here. Thanks for joining us as always. This has probably been our biggest quarter in Q3. We're getting more and more partners on. I'm doing all the onboarding when it comes to like that training for new onboarding partners. And that's why I tell them every time is the sales success team is here to help you. You help your borrowers, we help you. So, just some things we want to talk about, some things we're thankful for, is we wanted to do kind of like a year in review, kind of looking at these types of things that have, new, upcoming, talking about the future as well as the past. So, really, the biggest thing here, if you're new to this or maybe you have been using it, right, we've made a lot of enhancements to the lead portal over the course of the last year. You've never met me before. I've been with this company almost 6 years now, right? This is something where we're always continually working on this, but this last year alone has probably seen more enhancements than I did the previous 5 years I've been working here. So this is something where we're going to continually make Lead Portal look better in UI UX changes, but we're also going to give you more information. And that's something our engineering team is doing big, targeting Q1. We're going to add in a lot of new features when it comes to visibility for you as a loan originator, right? We're going to keep adding in new functionality for you to understand where these applications are, what's going on for them, as well as we're building out support for you. We are currently working on a new office in Texas, a brand new team dedicated for loan officer support. So this is something to me that's very exciting, right? We are shifting that mindset. You are all, our customers, the people we want to focus on. So we are adding in all sorts of functionality, and as well, we've already added tons of functionality in Lead Portal for you all. And we are continually making this not just a place for HELOCs, right? For all our products. We want this to be a source for you to go in for all sorts of different products to make it your lending space, the Lead Portal. So we have HELOC, we also have DSCR, Piggyback, and our crypto back loan. We did a webinar on this probably a couple months ago now, but you can now refer crypto back loans. You don't need to know anything about crypto. This to me is really exciting and a way for you to offer a new product for your borrowers. So maybe not even, in a traditional lending space. This could offer up new opportunities to help people, especially at the upcoming holidays if they want to leverage their crypto. But also just the fact that we are targeting, and I'll talk more about this later, opening DSCR up to our larger, population over at Figure Wholesale. And we are opening Piggyback. More and more partners are getting on board with this. I'm training more and more partners with Piggyback, both refi and purchase. So this is becoming more, a less of a space for just HELOCs like it has been for years. And now this is becoming more of just a lending platform. So, I'm excited for it. I think 2026 is going to be even better. We have a lot planned in the works.
So Alex and team, before you move on, the slide deck here, I just want to kind of on that bottom left point, the concurrent product rollouts. Of course, the HELOC, the DSCR, and the piggyback. And we've made some improvements there. A couple things I want to clarify on the crypto, which it says there, it is a referral program, and we need to arrange marketing / referral agreements with each partner that wants it turned on. We've already had several partners that have turned this feature on, so they can always reach out to us at salessuccess@figure.com, and we will direct that traffic where it needs to go for getting that activated. I will just share with everyone that when we first started talking about this, I was like, I don't know, crypto backed loans, is that really a thing? But I'm here to share with you, it is actually a thing. And this is a main point of conversation in the markets right now. And so if you think you have a borrower that is in that crypto space, you may want to at least have that conversation like, hey, not sure if you're interested or not, but I can make a referral and send it over. There is some small marketing referral agreement compensation built in there as well. So it's kind of a good thing. But on the piggyback, team, I had to bounce off of our last webinar. And I think if I remember right, you all talked about piggyback a little bit, but I kind of want to drill this point home. We're seeing something happen, which is great news. It's great news for all originators in the industry right now. So please, 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 if you're not already doing this, take advantage of it. And that is this. If a homeowner bought their home in, let's say, the last 3 years, and Scott, keep me honest here on some of these rates, but you're probably north of 7.5% if I bought a home 3 years ago. Does that sound about right, Scott?
Yeah, it's 6.5 to 7.5. Yep. Yep.
Yeah. And so in our industry right now, in the current marketplace, there is a great opportunity for rate and term refinances. Let's say you can go down to 6, low 6s, maybe even high 5s in some cases, depending on discount costs and that type of thing. However, the minute you go to add cash out, the loan level price adjustments, as we all know, will send that rate right back up to the 7+% range. Okay. So for our partners, and it's not across the board, but for our partners in our white label / retail channel, have the ability to do piggyback loans, even in a refinance perspective. So why is this key? It's key to me, my opinion. So many homeowners that, yes, you can do rate and term refis for them. However, they have cash needs. And just as a reminder, we simply are adding a HELOC using your rate and term approval to issue the HELOC. So very, very seamless, very quick, and it satisfies the cash need of the homeowner. And oh yeah, by the way, what a great way to extend or continue creating stickiness with your clients, right? Because the time will come, maybe they want to pay off that HELOC, whatever the case might be, and you will be their source to do it. So I know we're not doing a webinar on piggyback right now today, but the message here, please take it in. One, take advantage of rate and term refinances if you have it. Also, if you're in our retail partnerships, find out if you do or don't have this feature turned on. If you don't, reach out to us again and we'll get you connected with the right folks. Again, in my opinion, I just believe there's a huge opportunity for that. And Scott, you and I have been doing this long enough to remember when this was a thing. Do you remember? We used to do this on the regular.
Yep. And we didn't even get paid on the seconds.
That's right. And now
yeah. Well, we still did it. We didn't get it. Just makes the first a lot cleaner.
Yeah,
Yep.
that's exactly right. And when you look at the blended rate between adding a HELOC behind your rate and term first, the blended rate in most cases is still less than doing a cash out refinance. Now, speaking of cash out refinance, which we don't have listed on this page here, but don't forget, please, to use the lead portal and the inquiry tool, even in a cash out scenario, to at least check and see how the numbers stack up from a strategy standpoint in first lien position. I was talking with one of our partners, Alex, last week, and they were using our loan in first lien position, paying off the existing first lien. It was a smaller balance, existing first lien, paying it off with our product in first lien position, and the rate was in the mid to high 6s. I got to tell you, in a cash out transaction, again, depending on LTV, FICO, and all the restrictions we have with agency loans, I want to encourage you to take the less than 2 minutes, run the inquiry on that scenario, and at least do some due diligence to find out how does it stack up, all things included, costs, rate, turn times. Make sure you're comparing all those things because you may find a real opportunity in first lien position, even from a cash out standpoint, using our product.
Tim, you want to mention how to find out if you're eligible to pay off that first lien? If there is an existing one and not stopping too short?
Oh yeah, and actually, we will. Let's come back to that, Scott, because I'll have Alex pull up the screen on that. You know what I'm talking about, Alex? We just discovered it earlier this week, and I think you were able to duplicate it and test. Thank you, by the way. Um, so anyway, all right, Alex. Sorry to derail there, but there were a few
How dare
talking
you.
points that I know, right? But you know me, Alex. That's just what I do, right? So you may continue, fine sir.
Oh, finally. All right, here we go. Just what I wanted to talk about too is just the fact that, again, our HELOC is our biggest product, I would say, across the board. Most of our partners coming on, they really want to use this just to get equity out of, someone's property, help them get cash out. Really think about this so much different. This is a completely different product in my head than like a HELOC in the past. This is something I really try to, tell partners. This product is quick, it is easy. You go in, you do an inquiry, you get to see if there's offers. But we have added on so many new features. The biggest one to me is business bank account linkage. This to me shores up so many different things with self-employed individuals because if they have those business bank accounts, they can link those up to verify income. We do not ask for documentation there. They can link up multiple of those accounts if they have them. It makes income verification really easy for those individuals. And to me, this is probably one of the biggest changes we've done over the course of, the 6 years I've been here, as well as we've added variable rates, which to me is really, something that borrowers want in a market where the rates are going down. So if, you haven't used this in a while or you haven't really been looking at recent changes that we've made to it, this product to me is so much different even today in, November as it was, let's say, back in January. So look into running an inquiry just like, I mean, Tim said it best, right? Spend the 2 minutes to do your due diligence. See if this is an offer, even if your borrower's not asking for a HELOC, this could be a great option for them. Maybe they want to treat it like a HELOC. They take out the full disbursement and they just make monthly payments on a 30-year term. Could be a great option for things like debt consolidation. Or maybe they do want to do a full, line of credit with a variable rate option. There's that option for them too. So look into that. We're making continual improvements. We've added on that version 4 of direct debt payoff for lien payoff. And we'll take a look at that, Tim. I'll pull up that example
Yeah.
you're talking about, as well as a whole bunch more. And we have more planned in 2026. So please just look out, keep your eyes on newsletters, our webinar. This HELOC continues to grow and grow, and we don't have plans to stop at any point. We take your feedback, we make it better and better. And to me, this is our, bread and butter product. So do the inquiry where you can with this, as well as again with all of our different products. We make it easy for you to see if there's offers available.
Team, I think it's been about 3 weeks since we launched the ability through Plaid to link to business bank account. And I just want to give everyone some best practices here, some things that we've discovered already. Number one, Alex, you're spot on. It's been an incredible lift for us. This really has been a great solution, especially for that self-employed borrower. Whereas honestly, that was never really our strength historically, right? For numerous different reasons. But this business bank accounts has helped tremendously. However, here's one of the things we're seeing. I just spoke with an LO yesterday, watched the behavior of the borrower working through the application. They linked to their personal, they linked to their business accounts, but it was not giving them the income, if you will, from their business bank accounts. Well, know this, loan originators, that if that's happening, even though they've given authorization in the Plaid system to share the data, what we're seeing, which I've now seen twice, is the borrower actually has to log on to their bank account separate from us altogether or go into their banking institution. And what they'll discover possibly is that the account is toggled to where it doesn't share to third parties the deposit information. And it can be as simple as toggling that on. right? And they can do it under their account settings. If they log onto their bank account, they can look there. Every banking institution's different. But I just share that because when we've done that, when we've had the borrower do that, sure enough, in comes the income calculation. But prior to that, and we were kind of going round and round in circles, like, well, why is this happening? Why is this happening? Well, we discovered that the borrower's banking institution, in some cases, has basically an on-off feature for sharing data like that. So just know that's one of the things you can.
Yeah, Tim, I just want to jump in too. And I think there's a misunderstanding that business bank statements is some type of stated program. No, it's an option for a full doc loan. You can always try business bank statements, or you could go with the tax returns. One of the two when you're self-employed. It is a full doc. We consider it full doc. There's no hit for using business bank statements like the rest of the mortgage, investors utilize. So, yeah.
That's actually a great point, Scott, and that's one of the reasons why I think it's been such a big lift for us is so many self-employed borrowers file extensions. Well, as you know, we're going to use the most recent required year, so that won't work. We didn't previously have the ability to use business bank statements. We do now, so we're definitely seeing a lift there. But you're right, Scott. It doesn't change anything in our program. Here's an interesting fact, just as a reminder for everybody. In our system, Alex, keep me honest here. A borrower could literally use every income verification method.
Yep.
They could use every one of them. And what number are we going to use for income?
We're going to use the highest. And I say that every single time because everyone thinks the opposite. And I don't, blame them, but we take the highest method that's linked. And I want to make that clear. Bank accounts are one method, both personal and business. That all stacks. But all these different methods like taxes, asset accounts, that kind of thing, those will take the highest on.
Yeah, and the one income verification source does not stack on top of the other income verification source. It is either one path or the other. However, they could literally choose every income verification path, and we will use whatever is highest. Listen, folks, take this seriously because this is setting the expectation with your borrower. You could literally have them try every method we have. Now, Alex, here's why loan officers don't totally grasp this. It's because in the real traditional loan world, we all know as loan originators that if I submit pay stubs and I also submit tax returns and my tax returns show a lower number, Scott, what number is the lender going to make me use?
We're going with the lower number. Yeah. They will go with the lower number. Yeah.
So that's really, again, a great opportunity there. So just, take advantage of that.
Look, we don't have underwriters who are seeing everything you send in. I mean,
Right.
it's in the traditional underwrite, you have an underwriter who now saw a lower number and they are trained to go with the lower number. We are digital, they're digitally verifying their income. The system is set to take the highest of the two numbers, three numbers, four numbers, whatever, and you're good. You're good to go. It's turnkey, Tim.
Yep.
One tip I have for you all as well is when the borrower links their business accounts, from what I'm seeing, once they verify income, the next page they're going to select their disbursement account, so where they want the funds to go into. It is a whole pain if they select a business account because we need to verify ownership. We're going to ask for additional documentation. It can slow down the process. Have them link up a personal actual account instead of a business account for disbursement. That way it verifies in seconds and there's no hassle there. They can change that later with servicing if they want to. But I've been noticing that since we added the feature as it's slowing down apps. Tell the borrower, hey, you can verify via personal or business, but if you do business, add on a personal account for disbursement. It's just going to speed everything up.
Yeah, and Alex, I will say that as we're talking with our partners on this topic, what I'm suggesting is that the borrower start by linking personal, also link their business, and let the system go from there. And I'll tell you what we saw, Alex, to your point. We saw a partner's borrower only link their business. Okay, cool. That's fine. You can do that. And it verified enough income. Great. However, the borrower skipped past the screen of adding an additional or different account for disbursements and payments. So the borrower kept moving on because, of course, it's very fast. Everything's moving along great. Well, then all the borrower's like, no, I don't want my money going there, and I certainly don't want my payment being made from there. Well, guess
Yep.
what? There was no going back in time in our platform, so we had to modify and restart the file. You see, so
Yep.
if you add personal and you add business, then it will show up as the account in a list. Which one do you want the money and payment handled from? You know what I mean? And they could just
Mhm.
put a check mark next to that personal account and all is fine.
Yep. And that's I think the biggest takeaway. They can't change the disbursement account once it's selected. This is all like kind of a sign tangent, I suppose, but really keep in mind, folks, this is what we're here for. Like the advice, if you have questions on this, we'll post the information in chat, but you can reach out to us, schedule time on this if you want to learn more. And we'll go over to Q&A soon. I do see some people have their hands up, some questions in Q&A. Please engage with us. This is what we're here for. Um, I'm gonna share my screen again. Let me hold on one sec. Let me flip around here. So, Tim, did you want to talk about our DSCR rollout plan for next year when it comes to figure wholesale?
Yeah, I sure do. One, we rolled this. Oh, it's been a few months back. We always use our DTC environment to pretty much test and see if we can break things and then improve it and break it again and improve it. Just sort of what we do. We've since gotten through that process. We then added it with a handful of our white label partners currently, and we're currently building it to also be able to offer it for our figure wholesale partners. We should have that done by the end of December. So think of this as a first quarter move that will go live with it. My opinion again, I'm sharing a lot of my opinion today, but in my opinion, the real magic here is similar to that of our HELOC process, and that is how quickly you'll be able to get an answer on what DSCR products are available. You'll see the
Hmm.
pricing, you'll see the terms very, very quickly, much faster than going and looking at a rate sheet, calling an account executive, putting a full file together, on and on and on, right? So that is really going to be the magic. I think we're seeing some good wins there. We'll see where this goes. We'll continue to enhance the program, but just know it is coming for wholesale as we roll into the first quarter.
And honestly, finally, folks, we just wanted to say thank you during this season. The biggest thing here is the fact that, with our partnership, that's how we grow. The feedback is how we grow. Interaction like this is how we grow. So, really, again, just to reiterate everything, right, we are going to go into 2026 strong. But we just wanted to say thank you all just for, joining us for the session really today, as well as just everything else across all our partnership types. We're thankful for all of our partners. It says 170 plus, but we probably have a lot more by this point all across, say, Figure Wholesale, all those small broker shops up to our biggest partners. We are thankful for you. So, with that in mind, right, again, engage with us. It could be things like jumping on sales meetings, right? You can email us for advice if you want to schedule time with our team. Engage with us to learn more about these products, to help your borrowers. We are here for you. So, I'll post here in a second our contact information, how you can get a hold of us, all of that. And with all that said and done, if you have questions, if you have comments, please post them in the Q&A and we will be happy to answer any questions you may have.
And Alex, on this topic, one of the things I want to add here is for any of our partners, we've had some great success, both Scott and I and Mike and I as well, and Alex, you in the past. We're looking to expand this effort as we go into next year, and that is the effort of doing on-site events. If you
Hmm.
happen to have sales rallies, if you have larger branch meetings or something of that nature, we've seen some real success when we can engage with you and your sales teams in person, right? One, it's great. We can have a little bit of fun. Maybe we do lunch and learns, maybe special team building events, certainly sales rallies. Scott, you and I, we did one for a partner last month, I believe it was. And wow, what an incredible impact just having spent 2 days with said partner and their sales team. So keep us in mind for that. We're always looking to engage in those types of events.
Absolutely. All right, I'm going to stop sharing my screen. That's enough of a slide deck there. That's enough of those. All right, I'm going to post in here our contact information. Did we want to go over to Q&A, folks?
Yeah, we do. And right out of the gate, and then Mike, I'll let you drive from here. But uh, Ari commented, even if the account is connected. I'm maybe Ari is commenting on my comment regarding do they need to get their bank to toggle a switch? If that's true, yes, I've seen it where even when the account connects, it's not pushing the data over because the bank institution literally has a blocker. And so I think that's what the question is. Mike, it's all you, brother.
All right. Lee has a question. You mentioned earlier that it sometimes works better to pay off the first mortgage and put the new HELOC in first position. How do you get the system to know that you want to do this? I have one particular application that I can't even generate offers, and I think if I get a first position HELOC, that may generate the offers.
Okay.
I want to look
So
this up.
yeah, a couple things on this, and I don't know that we'll be able to demo this for you, so I'll try and make this as clear as possible. So you should be, if you're not getting offers, you should be, if it's a DTI, if you're not getting offers because of DTI, then a win back screen, I'll call it that, or our asset depletion screen, we've referenced it as in the past, should come up, and you have to scroll to the bottom of it to see what, if paid off, would in fact result to offers. So that's the first place you would find it. Alex, would you add anything to that?
No, I don't think so. I think for the most part there, that's going to be the biggest thing is when it comes to it, it depends on like DTI and it comes to, on the actual modal itself appearing.
Yeah, and of course CLTV, but nonetheless, that win back screen should be
Mhm.
popping up. Now, here's what I've seen, and hopefully we'll get this changed. It's come up before in engineering. When that screen pops up, and Alex, I don't know if you can show a demo of the
Oh, absolutely. Give me 1 second.
thing because I'd really love everyone to see this. Um, you have to scroll to the bottom to see debts that have paid off would qualify. And by the way, that includes liens. I've seen this. I've seen it work. And so, but if you don't scroll to the bottom, you may just see that page and continue on and never realize.
Yeah, so if we run an inquiry now, what I'm going to do is I'm going to run an inquiry and it's going to force the DTI to be too high for our requirements, but everything else is perfect. What it'll do, to Tim's point, is bring you to that asset depletion screen where you can restate income, state assets, but scroll down. So you're going to see qualifying debts, liens, information here that if you select these and hit save and continue, it'll rerun the underwriting based on these selections.
And scroll back up for me, Alex. So when that screen pops up, that's what it looks like. And if you don't realize you can scroll to the bottom, you may very well never know it. What we're going to work on here, everybody, and give us a thumbs up if you think this would work, is I think it would be best if we moved the debts pay off to the top of the page. You know what I mean? So that we didn't miss it. The other thing that can happen, however, it happens when you're getting offers. And Alex, I don't know if we can pull it up and show that new.
Yes, I'm pulling it up right now as quickly as I can.
We've kind of tripped across something. By the way, we recently improved the logic for lien payoffs. And however, as a result of having improved that, we learned something, didn't we, team?
Yes.
It was like, well, wait a minute, they changed the way that looks and feels. So, Scott, to your point earlier, this is what you mentioned that we should show. And so here we go.
Yeah, it's going to take a second, but that's all built into the offer screen with direct debt payoff. My biggest thing is play around with it, right? You can't break anything. I see a lot of loan officers will take that screen at face value, as well as, what goes into it. So the biggest thing to me is, let me pull this up here. If the darn thing would work, you know how test environments are. When you are on here, and actually I'll take a step back so you can see this, right? First off, you have to select a term. Once you select a term, this is the offer screen, you're going to then see the IntelliDebt direct debt payoff option if they have debts to pay off, if that is an option. So you're going to hit this get started button. And what we have built in, depending on the situation, is you're going to have a list of available debts. Now, what we have been getting communications from loan officers, to Tim's point, is basically saying, hey, on this screen, there's no liens to pay off. Why can't we pay liens? I see auto loans, credit cards, personal loans, that kind of thing. Well, the way that our product team has built it out is if the lien payoff does not result in a savings, what's going to happen is it's going to be shown on a next page for the full list. Because what this is trying to do is it's trying to say, and this is a test environment, ignore the $0, but it's saying, hey, these are the debts that'll save them money. But if you hit the next button, let's say they want to pay off some credit cards, on this next screen, what it'll say is it'll go, hey, they can pay off, this lien, but, that's where it's going to say, hey, this can, result in different scenarios, depending on that lien. So keep in mind, if you see it on that previous screen, it's trying to calculate what would be a savings for the borrower. That is based on estimates. That's based on the information it's pulling. Try to go through it. Again, I see a lot of loan officers that'll just take things at a glance and then leave the tab, play around with it. Again, the big thing is that next button. You'll hit that next button. It'll bring you then, and it may have a list of multiple things. It will show unavailable for what we can't pay for transparency's sake. But again, it may have a 2 pages here. Then we go, oh, okay, we can pay off that mortgage. Then if I hit that, see loan terms, it'll show me the new breakdown. I'm going to pay off the mortgage and those credit cards with a new loan amount. Okay, now we can see how things shake out. So now it's going to show me the debts pay off, and maybe the borrower is going to, be qualifying for more money because the DTI breakdown. Maybe, maybe not. But look at all of that, play around with it, right? It is a system to really customize.
Yeah, Alex and Mike, I believe you were both on the call that I had you jump on real quick so that we could
Yep.
see this firsthand and witness this earlier this week. And sure enough, the scenario is the loan originator was not being given, or in their mind, they were not being given the ability to pay off the existing mortgage. So what the loan originator did, and there's nothing wrong with this, they went in and lowered the income on the inquiry, forcing a DTI issue, and that's when the mortgage then came to be paid off. However, that also caused a problem because she reduced the amount of stated annual income. Well, now that capped the loan amount. And even though it gave her the ability to pay off the existing lien, it would not allow her to do a 15-year term because of the DTI. So we jumped on a call with said loan originator and we reviewed this. And it was that screen right there. She saw the list of revolving and installment debts, but the minute she clicked next, that's when that existing mortgage popped up and that's when she paid it off. And sure enough, and it worked beautifully. So we've learned a little something there. As they improve that logic, they also change that workflow. And so we're trying to get that news out there as best we can. So anyway, Mike, you want to continue with our questions?
Sure. Yeah, I have a quad. Borrower lives in one of the units. Can you do HELOC? If so, would it be based on a primary or investment?
We will do 2 to 4 units, and if they live in the unit, it would be a primary. If yeah, that's not a problem. By the way,
John,
little side note on that. I don't know if that it's a condo or anything, but remember, everybody, we never do HOA search or condo questionnaires. That's a real huge opportunity for you all.
Yeah, it is a big thing to me. I advertise to a lot of our partners, right? Do condos. It's really beneficial.
Go ahead.
John, sorry, John asks, working with a DTI issue now and did not see the win back screen.
Okay, so John, let's take that offline. Reach out to the sales success team. Mike, can you take that one, please, and help
Yeah, of course.
John navigate? And by the way, this is not there's tons of moving pieces in the lien payoff paths, if you will. So it's not like every single lien's going to pop up to pay off. There's certain magic that needs to happen. We have improved it. It is working much better than it was at initial launch. However, I'll give you an example of one that we've not been able to make work, and that is our system could not determine which of the 2 loans was in first or second lien position. For whatever reason, the system could not identify, and because of that, it never would give an option to pay off any liens. So there are still pieces, being completely transparent here, where it won't happen every single time, but it has gotten a lot better.
I was recently having discussions with contractors at a home show promoting a great resource, which is Figure. Love that. For HELOCs to finance home upgrades. Later reviewing the home show brochure, notice the Figure ad. Can you remind me the difference between clients using Figure directly as opposed to using an LO? Is there a different cost? Obviously, an LO can offer one-on-one service. Um, can't remember from a prior seminar the price difference to the borrower going direct. So, is there a difference between going direct through Figure or going through a loan officer?
Ken, in this case, depending on your model that you're in with us, the partnership level you're in with us, whether it's retail or wholesale, could be a difference in this answer. And here's what I mean by that. Rates, for the most part, direct to consumer channel, uh, white label, wholesale, they're all pretty much on the same page, right? Sometimes there's some different pricing specials that run. However, here's where the difference is. And this always kind of surprises me. Number one, Ken, kudos to you for making the comment. Loan officers can do one-on-one and strategy sessions. You're spot on about that. You make all the difference in these transactions, I promise you. However, if a borrower goes to the direct to consumer channel and you're not in the retail channel yourself, then they have origination fee options all the way up to 4.99%. What does that do? It buys the rate down further. And if you're in our wholesale channel, you're capped at 2.99, and in some cases even lower, depending on state fee, O fee caps, right? So this is what's always caught me by surprise a little bit. When I look at our direct consumer or retail models, I see time and time again borrowers choosing 4.99. Now I look at it a little bit different. I go, okay, well, maybe that makes sense. But does it though? In other words, Ken, if you're looking at it and you've got a 2.99 and the rate's 7.5, and at 4.99 the rate's 6.75, well, what's the difference in cost? What's the payback term on that? You know what I mean? And that, Ken, is to your point regarding the one-on-one sessions and the strategy and conversations you're having with the homeowner. But for the most part, as far as net rates, all of those channels are all pretty much on the same page.
All right. Danny's got two questions. One is I have two HELOC prospects. While logged into Figure, I copied the link into the browser and sent it to him. When he tried to open the link to apply, it asked for a password. How do I send them the link to apply?
So my guess is, Danny, you're one of our retail partners and you
He
have
is,
that
yes. Yep.
function. And so one, you do have the copy the link, which it sounds like you're using, but when the borrower clicks on that link, they do need to create their own username and password credentials. It's a secure environment. So every single time, whether you've sent them a link or they click on a link to accept an inquiry offer, they will have to create their credentials. So assume that's what your borrower's seeing, but there is no way to do it where the borrower doesn't need to create their own credentials, just mostly to keep everything in a secure environment.
And I want to add on to that too, Danny. Just looking up your profile, just reach out to us if you have questions on that. We can go over how that works. We can give you examples, as well as next week. I should be doing a nice little webinar with y'all. But reach out to our team. Either me or Mike can just give you a quick rundown on how that works. Real simple. We'll
By the
go over how the
way,
bar flow.
by the way, Danny, on this, as much as I love the direct link, don't get me wrong, I think it has a great use case. However, we are going to always encourage you, when you can, always run the inquiry for the borrower first. There's numerous reasons for that, but one, you're controlling the data entry. A lot of homeowners don't know what they don't know, and sometimes they miss things like annual income versus monthly, and they don't get offers, and you may not even be aware of it, and they've moved on. When in fact, if it was annual income, then maybe they would have gotten offers. The other piece is, which we commonly see homeowners miss, is are they aware that we will allow spousal income only, even though we only have one borrower in community property and homestead states, and all this information's on our resource center there. But we will allow them to add spousal income. Well, did the borrower, when doing the application on their own via your link, did they realize that? You see what I mean? So there's some pieces there that we really love driving the behavior for LOs to start with the inquiry tool.
All right. And so I'm sorry, Lee is getting a decline message for credit utilization above the threshold for which we extend credit. Is there any kind of, what's the reasoning behind that, and is there a fix for it?
The reason behind it is, and it really affects that FICO range between that 640 and 680 number. In fact, Alex, wasn't it you and I just diving into this the other day, on utilization? Honestly,
Mhm.
sometimes, if I'm being honest, it's enough to drive us crazy. But the logic is built that based on amount of credit used versus amount available to them, actual true credit utilization, the system could kick it out. Now, as to a solution, as much as we've pushed back so far regarding trying to get rid of this credit utilization workflow, we've not won that battle with the credit and product team. However, be sure if the borrower's married and you are in spousal and community property states, try running an inquiry for the spouse and see if you have the same scenario.
And if there's no spouse, move on.
Yeah, I mean,
Yeah. I mean,
honestly,
don't
Scott, you're not
get all
wrong.
for it.
Yeah,
No.
it when it works, when it fits, when you get offers, you're going to go sail through so fast. When you set the expectation of the borrower, here's what to expect. Here's what Um, and Alex, if you can you bring up just the lead portal screen and just let's recap and show everyone where they can find the resources, please? This is also
Oh,
a recent
absolutely.
enhancement. I want to make sure everyone knows where they can find this. There's screenshots, there's tutorial videos, there's all kinds of good stuff.
Homemade and curated by myself and maybe some other people, we'll see. All right, looking into this, here we go. So you're going to have the resource center up here at the top left. So with that resource center, let me actually back up a page. Depending on the partnership type, this may reflect maybe a different name, but you're going to have a marketing toolkit. You're going to have a HELOC folder. This is specific information for the HELOC, and you may see folders for different products. So if you're a partnership type with like DSCR enabled, you may see a folder for that, so on and so forth. And then there's also a folder for Lead Portal. That's for job aids, just detailing Lead Portal, how to use it, like a tech guide type of deal. But in the HELOC section, you're going to have multiple things. Number one, the biggest thing to me is you're going to have videos. The big one here is a consumer-facing video that takes you through the borrower view of what they go through. This again is consumer-facing. You can send it to them, say, "Hey, watch this 3-minute video. This is what you're about to experience." If you click on these, there is a download button. And then I've been organizing this, putting things into different folders. You're going to have things like income verification in here. There's going to be different videos, different information about that. So if you want to learn more about business bank account linkage, tax linkage, that kind of thing, as well as I have all sorts of different types of documentation. And the big one here is going to be the product guide. That product guide is going to have most of the information there for whatever product it is. In this case, it's the HELOC. So you're going to have eligibility matrices. You're going to have more information when it comes to specific scenarios and the like. So review this information, right? Tim says, understand the product and the process. Product guide is going to be there for you and these videos. And I'm going to keep all of this updated as we make changes. They're going to have the last update date and time stamps, and there's a change log on most of the documents.
Yeah, and by the way, Alex, if you haven't already, we do need to make sure we get an update regarding that path or logic regarding that lien payoff that we demoed too.
That is going to be updated on Friday, my friend,
Excellent.
because
Thank
I'm
you.
off tomorrow. You can't make me work tomorrow.
Yeah, right. I want to share a quick story with everybody, literally very quick. I was at a partner event a few weeks ago, and I had a loan originator walk up to me. I'd never met him before, and he said, "Hey," introduced himself. "I think I set a new record." And I'm like, "Okay, well, hit me with it. What are you talking about?" He did an inquiry, and the loan funded an hour later. Now, I was blown away, but it's because it was investment property and there's no right of rescission, and the borrower was engaged immediately. And of course, all the stars aligned, right? Everything worked out perfectly for that borrower. But think about that for a second. Do an inquiry and funded an hour later. That was blew my mind. Is that a record, Alex? Do you know? Is an hour, or have you seen them go faster?
I think that's the record, to be honest, when it comes to funding. I've done an application myself, 15 minutes. They went through the app 10 minutes. I did the e-notary personally, which that's a whole story. But basically, I got that all done 15 minutes, but they were funded the next day. So to me, that was probably the record, Tim.
It's
That's
interesting
quick to me, an
because
hour to
it's
get it
it's
funding.
it's interesting because we are headed into that time of year where I think sometimes as an industry we sit back and we think, oh, this is a slow time of year. I'll pick back up after the first of the year. Well, folks, I'm here to tell you that last week was the largest funding volume week in Figures history. Last week.
Yep.
So why is that important? It's important because I want to drive the point home. The opportunity is real. Do not shy away from these. Understand that when it works great. When you have a credit utilization code, like one of the questions earlier, is there a fix for that right now today? No. If they're not married, you can't do it. Try it with a spouse. It's okay. It took you less than 2 minutes to get to that point. Just shift gears and move on. Really, it's that simple. To Scott says it a little differently. Scott says a little rougher around the edges. It's like, what? You didn't watch the training? Hey, what?
I mean, I had a conversation with an LO new to Figure this morning, and it is the point that I try to drive home, right? We've solved for the life of the LO. This process is supposed to be pretty fast. It's supposed to be pretty easy. And the second that it's not, it's time to move on. Not everybody, not every loan product is right for every borrower. So once you feel like you're starting to bang your head against the wall for a little bit, please stop and and find a different a different option.
Yeah, that's hilarious. And by the way, I love this. Scott sent me a message behind the scenes here, and Scott says, "We take turkey and we make it turnkey." How's that? So there's Scott's quote for the day.
That's incredible. I like that a lot. I'm gonna put that on the email.
I should have been in marketing. What do you want?
You should have been.
Just
It's
put
so
the N
good.
in there, turkey to turnkey.
Yeah, I love that. Well, honestly, Alex, the real point, we've covered a lot, right? And we highlighted some of that new payoff lean path. Mike, keep an eye on the sales success inbox, as I know you do, and see if we can't help that one loan originator and navigate that. We want to keep reporting the wins, but we also want to continue to hear the feedback and say, hey, here's what I love. Here's what I want to share with everybody. If you're willing to be a part of the solution, we're willing to have that conversation. If you just want to call Mike and rip his head off and tell him how terrible things are, yeah, that's not being a part of the solution. So Mike and Scott and myself and Alex, certainly from our training perspective, we're always interested in looking for new solutions. So help us out, which you have, by the way, which is what we're so thankful and grateful for as we head into this Thanksgiving. So literally, happy holidays, everyone. Happy Thanksgiving. I don't know if you all have any more to add, but I think we're right close to time.
Now that is all. Thank you all very much. And with that, we'll see you in another 2 weeks. Happy Thanksgiving.